Hi, Jonathan York by Financial Partners, looking at investment markets. Equity markets becoming increasingly nervous as we approach the day when President Trump is going to announce tariffs. Now it looks like he's sort of planning about a 20% sort of blanket tariff on imports coming into the US. And claiming it's going to raise around $600 billion. Now that's quite interesting because that's increased sort of exponentially from when he was talking about sort of raising, hundreds of millions of dollars previously. But also, as well as discussed here before, it is a tax on the US consumer. It is not the country that is exporting the goods that pays that tariff. It is the importer, and that either gets absorbed by the company, therefore reduces its corporate earnings and profits, and therefore the tax take for the US government, or it's passed on to the end consumer. But quite interesting as well, the Wall Street Journal has led with this, the dumbest trade war ever. And against the backdrop of potentially a sort of a slowing economy, certainly the sort of major Wall Street banks are now revising down their estimates for the S&P for year end, but also as well potential for recession. Indeed, one major house has now revised its GDP down for the second time within a month. And against the backdrop with Trump's approval rating falling pretty much daily, but also as well the special elections that are coming up for people that he's sort of employed within the cabinet or sort of special posts, which were Republican strongholds, are now in danger of being flipped over to the Democratic side. And all this in the space of he's only been in office for 2 months. Now, on the back of potentially a slowing US economy, you've got interest rates falling there. The 2-year is back well below 4% now at 386, and the 10-year is back at 414. Now, just a couple of weeks ago, these were around 25 basis points higher. We've also got the administration still trying to sort out the sort of Signalgate issue with the confidential information being shared. And the more they try to sort of defend that and deny it, the worse it looks. So certainly interesting times for the US over the next sort of 2 to 3 weeks. But also as well on a potential sort of deflection from sort of the issues at home. Trump has come out and said that he is very annoyed with Putin and the ongoing Russian efforts in Ukraine. But interesting as well, Putin has just announced the biggest call up for troops within Russia, as obviously they're losing troops left, right and centre within the conflict in Ukraine. So as potential sort of supply issues, oil has spiked back above $70 now, 71.40 and change. Now that really comes as good news to the US oil shale producers because their break even is approximately $65 a barrel. But again, rising oil prices is inflationary. Now, slightly better news for the UK. Inflation has sort of dipped down to a 2.8%. That's encouraging there, but obviously just waiting to see what the impacts of the tariffs or potential tariffs could be on the UK economy. Now, a similar story in the EU as well, with inflation falling down to 2.2. Now, will that be enough to see the ECB cut interest rates again further? Still waiting to see the impact of potential US tariffs. And it's just this uncertainty that really makes policy making very difficult at present. But also in France, Marine Le Pen has been banned from holding office for the next sort of 4 years. So potentially that rules her out of any sort of running for the French elections. But then potentially, will the far right then try and bring down the current government? Now in Australia, the RBA left rates unchanged. The cash rate is currently 4.1%, and really waiting for more certainty. Now, obviously, inflation is falling in Australia, but again, potentially the impact of tariffs is still very unclear. You also have the election as well. Now that date has been set for May the 3rd, and on the recent polls now, Albanese is now sort of creeping ahead of Dutton in the polls, which really they were sort of running neck and neck, but now Albanese appears to be sort of nudging ahead. Now here in New Zealand, the Reserve Bank meet next week, and still looking for a further rate cut there. Just a question whether it be 25 basis points or 50. Because certainly the New Zealand economy is still sort of struggling and really does need a boost. Although there is some encouraging signs out there that certainly mortgage arrears are starting to fall, and that's potentially the impact of the sort of recent rate cuts starting to sort of filter through the economy. So while there are some encouraging signs out there, we still need a little bit of help, a little bit of a boost, and it'll be a major surprise if the Reserve Bank don't cut interest rates. And certainly 50 basis points would enable them to get ahead of the curve and really sort of keep momentum in the economy going. So if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.